Well, Sridhar Shivaram is now joining us. He's investment director at Enam Holdings. Sridhar, great to have you with us here on the program. Thanks very much. It really has been a parabolic kind of a rise, right? 700 points in 6 sessions flat. What do you make of the pace, and what does it mean for future returns, near to medium term?
So I think we are participating as part of a global rally. You see most large markets, barring China, all are hitting new highs or very close to their new highs. So I think India is also participating. I would say if you look at the emerging market construct, India has actually slightly underperformed. We are up about say 5-6% dollar returns. Even large markets like Taiwan, Korea are up 15-16. Brazil is up say 14-15. The entire EMEA, the European markets are up 20-25%. So there is a broad rally that we are seeing in many markets. India is participating a bit late, I would say, but it's good. We are also moving along with a lot of them. But I would say that there has to be some caution because not everything is great, even globally. I think my concern would be more global than India, that we still have another 2 rate hikes possibly in the US. We'll have to see how that plays out, how interest rates higher for longer, how that plays out in the global markets. We'll have to see, because we've been in a low interest rate environment for 15 years. How this plays out, I think, is anybody's guess.
We've been in a high interest rate environment for at least a year and a half, but that has not dampened enthusiasm, even for the one space where we thought what is typically called long duration stocks, right?
Yeah.
And AI is long duration. I mean, it's great and all of that, but it'll make money maybe in the future. And that is the one area which is booming, with rates gone up 500 basis points in the last 1 year in the US.
So actually, if you see the US markets, it's basically 7-8 stocks that have held the market. So I would actually say India looks far better, because if you look at India, the top 7-8 stocks haven't really done much. It's actually the next 20 that have actually taken the market up. If you see the broad private sector financials, if you add Reliance and SBI there, they have actually best market performed or underperformed. So to that extent, the Indian construct looks far better, that you have a broader rally, at least in the Nifty. Whereas in the US markets, if you remove the top 7-8 stocks, it's really nothing to show below that. And they do not have much to do with interest rates, I would want to believe. How it plays out from here on, if there is a slowdown in consumption, and how that plays out, only time will tell. Some of these stocks, especially the AI-related stocks, now reminding me of what happened in 2000 when you're trading at 40 times multiple of sales and stuff like that. We'll need to see how it plays out. There is a euphoria right now, and people are playing into it. I would want to wait and see what happens in the US markets, because that's going to determine how the Indian markets behave to a large extent, I would say.
So let's get into the micros. Sridhar, good morning. How do you see this battle of the bikes play out over the next 5 years? And which stock would you include in your portfolio?
See, I'll not get into stock specific, but broadly I would say, looking at, say, India's two-wheeler numbers for, say, last 10 years, you'll see that the overall number hasn't done much. We've had maybe 2% growth CAGR for 10 years. So it's a very saturated market as far as two-wheelers concerned. What we are seeing is a K-shaped recovery in the last 2 years, where 125 and below are struggling, and if you see above that, say maybe 150 plus are doing well. I think that will continue, and how the market share moves there, time will say. But I think it's going to be tough to displace some of the existing large players there. But there will be challenges. I mean, that's how I'll put it. I think the opportunity to a large extent is in the higher end. And I think at the lower end, what is happening is that even the EVs are disrupting. So the early EVs will come, or we are already seeing, some of these moped type two-wheelers floating around in the suburbs. They're disrupting the 100cc more than the higher end. So that's how I would look at it. It's a space worth watching.
So you would still be circumspect, cautious on the mass market.
If at all you have to play at the higher end. And that goes for almost everything in the, I would say, to a large extent in the auto space, that the higher end seems to be doing well and the lower end is struggling.
It's the case everywhere, right? It's the, the rural, the mass market, the lower entry points struggling, while at the top end, everything luxury is adding on more muscle.
So the K-shaped, classic K-shaped recovery is happening, which is again, coming back to the point that one has to be very careful in what we are owning right now, because there is every data point that we get, companies that we speak, there is slowdown in consumption, but a higher end is doing well.
All right, hi Sridhar, always good hearing your thoughts. Sridhar, sure. Given the kind of challenges that we have ahead, uncertainty on the Fed, there's likely to be a couple of more rate hikes, and it seems as of now, equity markets, they're just chilling. They're ignoring all the bad news, but pricing all the good news. Incremental money, how would you look at it? You've always told us that gold, some part of your portfolio, 15% of your portfolio. So incremental money from here on, how it should be allocated? You know, a lot of people would be looking out for advice out there between bonds, between equities, and say gold as well.
So I think within equities, I think all of us have some mistakes somewhere, some stocks we would have bought at the wrong time, but they're all doing well right now. I would say this is the best time to, clean up your portfolio.
Yeah.
Some of the exits that you can get now, you may never be able to get.
Yeah.
And there's always this FOMO of, if I sell, what will I buy? I think first you have to get over that. Cash is king.
Yeah.
So first do the right thing, which is clean up the portfolio. This is the best time possible. I would say, if nothing, look at what's happening in the fixed deposit space. I wouldn't have thought that I'll say this, but banks are offering extremely very good rates in the short term, because of the merger of one bank, and there is deposit, people are scrambling for deposit. So you're getting very good short-term deposit rates. If nothing, just park there for 6 months and see how things play out. I'm not saying sell entire equity. There are pockets where you see irrational exuberance. It's worth looking at some of those and wait for 6 months and see how things play out. These are not constructs for great bull markets. You have interest rates going up in the US. Our own interest rates, if at all, they may not go up. They're not going to be cut, at least for the next, say, at least 9 to 12 months. And we have an election coming up. And so there are a lot of question marks and uncertainties. It's better not to get into all this with a very aggressive portfolio. Be very sure on what you're owning.
Yeah.
Be sure on the earnings, and see how it plays out. It's not like, I'm not bearish on the Indian markets over the medium term, but in the short term, I'm really not very sure whether we have too much of upside.
So raising some money, cleaning up the portfolio may not be such a bad idea.
Exactly.
I just wanted to ask you about one such theme which we have discussed in the past,
Sure.
Insurance space.
Yeah.
I think you've been a little bit cautious on that space.
Yeah.
Some of these stocks, after getting hit, they are bounced back in style.
Yeah.
Do you maintain your cautious view out there?
Yeah. So I still maintain. So if you take a medium-term outlook of insurance, or if you just take the last 5 years, these stocks have done nothing. From a cyclical low, they have actually bounced back very smartly. I'm not an expert on buying the bottom and selling the top. Structurally, if I look at life insurance as a space, I know that they still have, at least for a person, 5 lakhs for a normal insurance and 2.5 lakhs for ULIP. That's almost 7.5 lakhs of tax-free product that is still available. And I know that mutual funds are, going to the finance ministry every time saying that it is not apples to apples. You're giving them tax-free options. You're not giving us. So either mutual funds will get tax-free options, or insurance will lose tax-free.
Yes.
If you ask me to guess, I think we know what the right answer is, that insurance will eventually lose all their tax-free options. Question is, what happens after that? And that's my big challenge, that the industry is not selling enough protection. Protection is hardly 10%. You're still selling savings. So that's my big question mark. So if you ask me, within the entire financial savings space, would I want to chase insurance? I think the asset managers are looking far better, despite all the challenges that they have in terms of the TER and other issues. I think that space is looking far better if I want to play the savings space than the insurance space. That's how I'll put it.
Got it.
Give us a few themes where there is still a fair bit of runway of growth, more structural kind of themes where there is some valuation comfort. AMCs perhaps is one, as you said. What else?
So I would say, I'll give you a structural theme. Whether there's valuation comfort or not is something we'll have to see how it plays out. But I think India as a manufacturing hub is surely is reaching there. I mean, we're meeting companies every day, and we hear that more and more companies want to manufacture in India, whether it's China plus one or irrespective of that. We heard some company telling us that, Apple's ambition is to export 100 billion from India in the next 2-3 years. They're not even 10. I mean, if that were to happen, most of them are in the unlisted space. The entire ecosystem is going to bust. So maybe the EMS is a space which has to be watched. They're very small right now. Market cap of companies are 8,000-9,000 crores. No big companies there, but they're all growing at 30-40%. Stocks have done very well in the entire space. But I think that's a space worth watching, which is the entire manufacturing space. I think India's coming of age as far as manufacturing. We've been hearing this thing that, India's potential of manufacturing. I think finally I'm seeing, on the ground, things really shaping up, where companies are really, getting large orders. Some of them may be in the unlisted space, so they may not
actually
see
the
that.
entire ecosystem. When we talk about Apple, right, the most visible company, all of it is unlisted, right? I mean, as of now, there's nothing.
But what happens is if Apple has an aspiration of 100 billion exports, the others will follow suit. The entire ecosystem. So initially, maybe the value add may be 15%, 20%. But eventually the value add will keep adding because the ecosystem will keep getting added in India. I think that's a space worth watching. So EMS is a space.
But valuations are okay, Sridhar? For
as
viewers
of now,
watching,
they're not. As of
so
now, they are not.
You wait for pullbacks.
So you have to keep a watch on them. Market always gives. So if you go back to March, we had a very sharp correction. Many of these were available at in their teens. Now they're in the 40s in terms of valuation. So I think you always get opportunity. So you have to be prepared as to these are the opportunities I want to look at. And you get opportunities. I think in every I would say 12 months, you get 2 or 3 good days to buy. So you have to be sure on that day what exactly I want to buy and how I want to build my portfolio. So if you get it, great. If you not, you wait for some other stock. So that's how I would put it.
Sridhar, great conversation, and thank you very much for
thanks for
coming to the studio.